The crypto cycle's bottom is clearly visible here. Hi guys, welcome back to my channel. In what stage is the cryptocurrency market? Comprehending how to price cryptocurrencies is the most crucial aspect of understanding them. And there are basically two main aspects that affect how I value cryptocurrencies. The first is global liquidity, which I refer to as the primary. I am aware of that. The long is the element that is cyclical after that. And then there is the long-term logarithmic tendency and technical adoption. Before we start the video, if you haven't subscribed to my channel yet, please subscribe to it and press the bell icon. So let's start by discussing the cycle. The cycle is the root of all the suffering, and I've been at this location since 2013, so you can believe I understand agony. I purchased my first Bitcoin at a price of $200. It increased to, I believe, $1,000 before dropping by 85% and languishing for a year or two until rising 10 times from my entrance price, at which point I sold out. It then increased by 10 more times before returning to its original position. And I've observed these cycles, which many initially connected to the Bitcoin halving cycle. And given that the Bitcoin halving cycle was created as a result of the crisis, I believe it is most likely a coincidence, as is the fact that the economic cycle operates over about the same 4-year period following 2008. And because there is so much debt in the global economy, it is the debt refi cycle. They try to tighten rates, which results in the need to refile all of this debt, after which rates drastically decline and liquidity returns. Additionally, given the economy's excessive debt load, there is a natural propensity for ongoing stimulus to be implemented. Additionally, if you consider GDP growth to be the sum of population growth and productivity growth, aging populations take that equation out. Additionally, it appears that immigration is politically taboo, especially given how stagnant actual earnings are. Therefore, productivity growth has stopped expanding as well. Debt has therefore become the only source of funding for GDP, but today, $3 of debt is acquired to generate $1 of GDP. We're kind of at the point where there is so much debt that it will never be repaid. Therefore, allowing for the increase in debt is the only approach to manage the economy at this time. Cash flows, however, are what pay for the debt. Therefore, GDP growth must outpace debt increase. If not, you must employ negative real rates because the GDP growth due to an aging population's low productivity has decreased too much to support debt growth. The way the world operates is through quantitative easing and other forms of stimulation. Therefore, if the economy heats up too much, they usually hike interest rates, which reduces liquidity and causes them to withdraw money from the markets and halt QE. This is something that has happened previously, and as a result of the need for stimulus, asset prices decline. Therefore, once asset prices fall, the economy either enters or begins to experience a recession, and monetary easing resumes because it is the normal course of events. So that's basically how the world is constructed, and as a result of the severe monetary tightening that is currently taking place, cryptocurrencies have fallen in value. Not the majors, but not as horrible as they were the last time. If Bitcoin, dropped to a 70.75%, which is similar to how Solana is currently, the previous cycle in 2018 saw a 95% decline. Later, more on that. And Bitcoin fell by 85%. Because there are more participants in the network, which means that its expansion is more robust over time, we are seeing a less pronounced tightening. So as you can see from this figure, which compares the global money supply year over year to Bitcoin, there is a strong correlation between the two. What's remarkable is that the chart's tops are all missing because the scale is flawed as a result of the current technological trend. When adoption rallies occur, they frequently vastly exceed where there is liquidity. And that additional tendency is what moves markets forward over time. Now, every time we notice these patterns, the boom and bust, someone cries Ponzi scheme. But the cycle of tighter financial conditions is precisely what's driving that Ponzi scheme phase. Currently, there is a lot of cryptocurrency speculation. We get that in technology stocks themselves, since it is the majority of new innovations. As a result, we are currently at the bottom of the future monetary cycle. We anticipate that the Federal Reserve will begin raising interest rates in modest steps. They only could go one step further in my opinion. So perhaps they will try another 25 econ to try to keep rates steady before waiting for the CPI to drop below the Fed funds rate, which occurs in March or April. So the game for the coming year is drastically shifting liquidity conditions. Inflation will decline much more quickly than most people anticipate, which will lead to stimulus. And by June, when inflation will be down to closer to 2%, the Fed will start to think or appear quite foolish. Given current oil prices, the area rates of change are most likely zero. And if the price of oil falls to $60 per barrel by the time of March and the following year arrives, it will have to decrease by 50% over a year since the Russian oil crisis premium of roughly $120. For a climate where there is inflation, that is really bad. Only comparable rents are increasing, and soon wage growth will start to significantly slow down. Thus, I predict that by the end of 2023, we will likely see negative interest rates again. Sorry, inflation is not at negative rates. 2023, 2024, rather than the 1970s as everyone believes, we should be using the 1940s and 1950s as our roadmap for this. Therefore, the 1970s were the only time in history where inflation rose, fell, didn't go all the way back up and then went back up. That was driven by demography, and the Federal Reserve is slaying an old ghost when they need to be slaying a different ghost. The 1940s and 1950s, when everyone was recovering from World War II and factories needed to retool, strike me as the more apt comparison. Price increases of 20% were caused by supply shocks and a subsequent demand shock from everyone returning to the labor. It was a bigger event than was reported, and as a result, prices fell, turned negative, fell to -3% year over year, recovered, and 2 years later, we saw a secondary bout of inflation merely based on the math. Because they didn't want to hike rates and wreck the economy, the Fed that time imposed yield curve control. In any case, I predict that this time will be similar. It's too soon to tell. For now, it doesn't really matter. At this time, the cycle is at its lowest point. I believe that inflation is less. The cryptocurrency markets, in my opinion, are likely to improve dramatically this time. The RSI, weekly RSI, and Bitcoin are currently near levels where reversals have historically occurred, which is another fascinating development that we are observing. We can observe it in the activity taking place while we are sitting in the train. Additionally, it is seen in the volatility. Significant volatility during the past 30 days for both. ETH and Bitcoin is currently at levels that always come before significant rallies and reversals. I believe I have everything set up now. I doubt it unless something drives bond yields high, and I just don't see that happening outside of a brief blip, because one of the inflation numbers or one of the employment numbers is somewhat skewed, so I don't see that happening. Is it possible to get some of it down? Probably not, but I doubt it. As a result, we are rising. Since I started adding to my holdings in June, I have been saying that if based in June, the bottom of the cycle is always a scam or a Ponzi scheme. It is detested by all media. Everyone engages in online shift throwing. Everyone is searching for scapegoats and somebody to blame. We have reached that exact stage. Right now, the world is terrible, and how ugly it is tells us a lot about where we are in the cycle. We are now in the period of desperation and rage. Then comes the acceptance phase, often known as the boredom phase, which I believe we have entered. During this phase, prices remain unchanged for an extended period of time, and people start to grow weary and go on to other things. You can see that people are becoming interested in artificial intelligence at a time when they ought to be considering cryptocurrencies. Don't forget that artificial intelligence is entirely virtual, but cryptocurrency is a real-time virtual currency that we can trade, which is one of its magics. Now that I've seen it with Mt. Gox, we're dealing with a tech scandal. I have some experience with fintechs. Every single bloody cycle I've witnessed it. And this time I thought, oh my god, the world is about to end. Yes, it truly is the end of the world every time. And what's this? The world will not perish because of this. People claim that no one will ever return to this market. I've been around though. I've been in this situation before. I've worked in the financial markets for almost 30 years, and I've witnessed this with hedge funds. The largest hedge fund participant in history is long-term capital management. The Fed was forced to save the entire system, which is what everyone calls a Ponzi scheme, fraud, over-leveraged hedge fund, and investable outcome. Over the following 7 years, hedge funds' net assets increased sevenfold. Why do laws exist? The area seems to have been cleaned up by my regulation. After that, people feel much safer coming in since the institutions are waiting. I've had conversations with hedge funds like some we have with Jeff Dorman when crypto interest surges, as well as with Uri and Timur. Sandy Call has had enough, and everyone here claims that the institutions are still considering this location. Therefore, my best judgment is that they start entering in a more significant way as a result of regulation and an increase in pricing upstream global liquidity. We saw similar behavior from the Madoff hedge funds and investable, opaque securities, which tend to be momentum chasers. Nobody is aware of their goals. One will invest money in them once more. What took place? That brings the total assets under management up by one issue in 5 times. Thus, that is what I am anticipating here. The market has no short position and has no actual ability to short unless you exclusively utilize finance. Regulation equals safety means green light equals go if that aligns with global liquidity. And because everyone is a little apprehensive about who controls it, no one really wants to use finance. Even the audits are opacity. As a result, things like EIF are deflationary because there aren't many shorts, and there is a ton of money entering the market. The greater the volume. Therefore, the price is more reactive the more inclined to raise it is, and the less it is around. So we're getting ready for a really fascinating cycle. I have been so investing any cash I can obtain. I'm investing my entire life savings in cryptocurrency. I've been buying some NFTs and I'm currently quite focused. I'll get to that shortly. Thus, I believe that is where the trend is headed, and that is the cyclical component. Thank you so much for watching the video. If you like this video, please hit the like button.